When I say that all the drama, of course, that we've seen, some say that it is affecting the corporate bond space in South Africa. Is this the case right now? Because we also know that the banks are starting to gear up for Basel III requirements, so that could also change the picture significantly.
Absolutely. I mean, there's undoubtedly the local market has seen some volatility, and it's reflected in the price action we've seen in the government bond space. But I think if you look back at where we were in 2006 pre the crisis, South Africa was a 40 billion rand a year issuance market. By last year, we saw that increasing to just north of 90 billion. As we speak now, we are probably at about 90 billion for this year as well. So we've had a significant growth in the bond issuance, if you exclude government, in our local market. Absolutely. Going into 2012 and certainly into 2013, as banks start gearing up for Basel III, you are going to see a fundamental shift in how corporates are funded, with them increasingly looking towards the capital market space. We do have a very deep, very liquid market, and I think just 2011 so far, we've seen close on a dozen new first-time issuers into our bond market, which has pretty much doubled the number of names in our market. So it has been a positive development so far this year. Going into next year, we do expect that trend to continue, potentially hitting the 100 billion rand issuance mark, excluding government.
Okay, this is quite a big number, 100 billion rand mark, so clearly a positive development, as you're alluding to. But we also know that a lot of corporates are much healthier from a balance sheet perspective, so have a lot of cash on the balance sheet. What kind of appetite is there really on the ground to soak up the corporate bond issuances, given the fact that a lot of investors out there are very wary of those companies that don't have a very strong cash position?
No, absolutely, and we are starting to see a lot more, what's the right word, discrimination in terms of where appetite is lying, certainly from the investor side. 2009, 2010, it was pretty much anybody and anyone, anybody was having a field day in the bond market and could easily get stuff away. We are starting to see certain elements of fatigue, if you want to call it that, for want of a better expression, in certain sectors. So your pure corporates, industrials, etc., will still find very good appetite. They have been fairly underrepresented in the market. If we look at that 90-odd billion number, corporates, pure corporates, have done probably about 15 billion of that. It has been heavily dominated by your financials, your big five banks in South Africa, issuing north of 30-odd billion rand so far this year, obviously funding some asset growth, and obviously preparing for the upcoming capital regulations. State-owned entities at about 15 billion. And we are starting to see differentiation between guaranteed and unguaranteed state-owned entities. Your pure guaranteed state-owned entities still getting their paper away very comfortably. Your unguaranteed state-owned entities not necessarily getting the volumes they want in their regular auctions, but that is also because they have got very attractive pricing from a spread perspective, very, very tight. So they're quite comfortable to keep that at this stage. So I think going into next year, we're going to start seeing investors being far more selective. Fundamentally, South Africa's bond market is underrepresented by the corporate sector. It's traditionally very government, state-owned entity and financials dominated, and we'd expect Basel III to normalize some of that relationship a little bit going forward.
Alexi, what about
but that's
the yields?
not to say we're going to see our market doubling in size.
Okay, doubling in size. With regards to yield, and we expect this has really got to do with the demand that's really on the ground right now. Does it make sense for corporates to actually get into the bond market? And it depends the premium that they'll be paying, of course, to head into the bond market.
I mean, yeah, from a yield perspective, if we look at historically, South Africa's benchmark rates are at record lows. They haven't been lower. South Africa used to have a very notoriously inverted yield curve coming into the crisis. For the first time ever, even though credit spreads might have widened slightly, and that really hasn't been the case. If we look at corporate spreads, for example, relative to government, beginning of 2010, we were looking at about 270 on a weighted average basis. We are now at about 130, 140. So not only have spreads come in, but benchmarks have also dropped. So it is starting to make it more attractive. Even if you have a slight widening in credit spreads, like we have seen over the last couple of weeks, but it's been relatively small, like 5-10 basis points at the most. On an all-in basis, these things are still looking very, very attractive. What we have seen, however, is a shift in where appetite lies. Almost 90% of issuance in the corporate bond market in 2011 has been floating rates. Very, very new for our market. It was traditionally always fixed rates. So investors are getting very tight spreads, locking in very low base rates now. But even if you look at how the curve goes up, 5-year rates benchmark sitting at 7% compared to where we were 3-4 years ago, well north of 10%. On a relative basis, it still looks very attractive. Yeah. You also need to bear into mind that as banks start gearing up for Basel III, there are going to be certain costs that are going to be incurred, and those will be passed through into higher bank interest rates. So on a relative basis, that dynamic won't necessarily play out as badly as it may seem.